Hey traders, 𝐿𝐞𝐫𝐚 or 𝐿𝑰𝐴 here. You're here for another episode of Common Sense Market Analysis. Today is Turnaround Tuesday, October 7th, 2025. You're looking at a daily chart of the SPY or Spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, first, I need to go over a few things that I missed yesterday. How can I possibly have missed a tinfoil hat event? Shame on me. But yesterday we had our first supermoon of 2025, otherwise known as a harvest supermoon. That took place yesterday, October 6th, and you guys know the drill with these tinfoil hat events. Many times, the market likes to either trade up or down into these events. And not every time, but many times, the market will turn after these events, which we just saw today. We had a little bit of a turnaround Tuesday. I'm not saying this is the sole reason as to why we had a little bit of a turn today, but it's definitely something that we need to be aware about. Something to put in our back pockets. By the way, look how beautiful this picture is. So we were down $2.49 or 0.37% in the spiders. Little turnaround Tuesday action. And really what the market is doing is running a test of the most recent breakout area. We'll make this blue just because, and we can see that the market kept going back to retest the most recent breakout area, which is right here. We nailed it the first time. Again, first time, best time situation. The trade is different the second time around. I'm not saying that this was a trading opportunity, but just taking it at face value, the market keeps going back to retest the most recent breakout area. Came up a little bit short of it today, but that was the main destination. The other main destination on the board is going to be this big time breakup candle low that happens to coincide right with the 20 period moving average at a nice round number. We'll call it 663. Speaking of those 369 numbers, I know a lot of you guys find it very interesting. I know a lot of you can't stand it, but I just can't disregard the fact that the market definitely knows about these numbers. They're important. They're magnetic. The market stops at these numbers for a reason. Take a look at the high today. 672.99. There's those 99 numbers. And then if we add them all up, 6 plus 7 plus 2 plus 9 plus 9, we get 33. And we've talked about over and over again that that number 33 is very, very strange. Whether you believe in it or not, the market stopped at 672.99 for a reason. Why didn't she stop at 673? We don't know. We're never going to know. But these are just puzzle pieces that the market gives us. We take all the puzzle pieces together to form the bigger picture. Now on a more serious note, where the hell is the market going? Well, in last night's video, we mentioned that there's a big fat round number right at 675. That's a big fat semi-round number. We'll see if we get some follow-through downside behavior tomorrow. Maybe want to run a test of this big-time breakup candle low, trying to visit the 20 period moving average. We haven't reached it in 1, 2, 3, 4, 5, 6, 7, 8 days. So we'll see if we get a little bit of follow-through tomorrow towards the downside. But the other side to it, and I've been saying this for days and days and days, if not weeks, is that we're in a very stupidly bullish tape. Everything is overpriced. The market is being controlled by the big time players like Nvidia, Microsoft, Tesla, extremely overpriced, each of them. So the other side of it is technically we can just keep going up until she doesn't want to anymore, until we get a sign in or signal of a trend change. Yesterday we had a doji candle that is a sign or signal of a trend change, but we did not have the accompanying volume to go with it. We did have some downside behavior today, and we'll need to see a little bit of follow through to see if that doji candle had any type of meaning at all. I do have some key important numbers towards the upside that Inside the Numbers and Live Room members will have ready. Let's go ahead and jump real quick to my number one favorite market leading indicator, Camp IWM. She's down 1.07%, and as you can see, that overhead resistance is still indeed important. It was a place where the market shouldn't just waltz right through. The more candlesticks we close below this zone right here, the more likely she's going to want to run a test of the 20 period moving average and or this breakup candle low. That is going to be the next destination towards the downside. But from this zone, we did spike it by a little bit. That is one of our infamous spike the high and rip it right back down in the other direction. Today the close was 244.16 against our overhead resistance zone at 244.30, one of our numbers, the front end number. So there's a reason why she closed pretty much right on that number, because it's important. Today we did come back and fill this gap that was unfinished business, spiked it by a little bit, closed right at the front end number of the overhead resistance zone. So again, the more candlesticks we close below that zone, the more likely she's going to want to run a test of the 20 period moving average that is normal garden variety behavior. And when that time comes, we'll see how she handles it, whether she wants to close above that or below. That is going to be some more puzzle piece information in my number one favorite market leading indicator. Guys, what did I say yesterday? I said that the market loves, and its job is to trick, trap, fool, and frustrate as many traders as possible the most amount of times as possible. I stated yesterday that although we were closing candles above this downwards trend line, we closed candles on Thursday, we closed candles above on Friday. I did mention in last night's video that the pivot is not out of the question because it's the market's job to screw traders pretty much. And that's exactly what she did. Although we did get some bullish signs closing candles above that trend line, the pivot was certainly not out of the question, as today we ran right back to the pivot and now we're trading once again within this channel. So that definitely is some interesting information / puzzle piece information. We'll put it in our back pocket. The market wasn't strong enough to keep on going and get some follow through towards the upside. Instead, she went right back to the comfort zone of the pivot. We've been seeing over and over again how important this pivot is. The transportation department keeps on testing that pivot. So now we need to see if we start to close candles below the pivot and make our way towards this upwards trend line, then that is certainly a flare up in the air. And my second favorite market leading indicator, the transportation department. Alrighty, let's switch gears and take a look at the shorter term perspective of the spiders, starting with inside the numbers. We're looking at the 0 dark 30 stuff. This is the morning game plan that's written out for members well before the opening bell, and let's see what we're working with. So we had our morning pivot as usual, and that came in at 670.50. Everyone knows the drill. Above the pivot she's bullish, and below the pivot she's bearish. It is important to take note of the overhead resistance zone, and that came in at 671.75 to 672.15. And then down below we had our first support zone down at 668.50 to 667.55. So let's put these numbers on the board. Alright, so we got all the numbers on the board. We got the morning pivot in green. We got the overhead resistance zone in red. And then we have the support zone in blue. Now, as you can see, we did open up above the overhead resistance zone. The open was at 672.55. And if we quickly go back to the notes, we can see in What's the Scoop today, at 9:10, 20 minutes before the opening bell, I stated that we were above the original overhead resistance zone, but it can now be utilized as support on the way back down for a potential trade. So these numbers, although this overhead resistance zone was originally supposed to be used as overhead resistance, it doesn't mean that the market can't use it as support on the way back down. These numbers are extremely important either way you look at it, either side of the tape. And as you can see, that was exactly the case. We came up a few pennies short the first time around, and then bounced back in the other direction. We came back into the number the second time around, had a nice little base hit. We weren't looking to necessarily trade that, but it just goes to show you that these numbers work. Either side of the tape you look at it. How about the 671.75? That was technically the front end number of the overhead resistance zone, and we used it as support, pretty much nailing it right on the dot and provided a nice little base hit. And then as stated in the notes, which you'll see in a moment, if we start to close candles below, then she's going to want to make her way towards the pivot, which was exactly the case. We did come up short the first time right here, so that does constitute as a first time, best time situation. The first time around is the best time to take the trade. Coming up short the first time, we're either looking for a spike of the number on the second time around, or we wait for the next number in the sequence, which happened to be this support zone down here. Same thing with the pivot. We did come up a little bit short of the number, so we were looking for a spike, either wait for price to get towards the midpoint of the zone, or just wait for the back end of the zone. We never reached the back end number. came up a tad bit short, but as you can see, this support zone was treated as support. It was a place where the market shouldn't just waltz right through. So overall, the numbers did indeed work today. It was a little bit of a harder tape to pull off a trade. A lot of the numbers coming up short, a lot of the first time, best time situations at hand, but the numbers work. When we started to get above the support zone and coming back down, you can see we used this front end number as support. Right here, again right here, spiked it a little bit, almost made it down to the back end number, but this whole zone was treated as support for the market. Take a look at the price action right here. You can see the importance of this number, 66850. Staying above that, she's going to want to make her way back towards the pivot, or at least make an attempt to. It's about 3:46, got about 14 minutes until the closing bell. Probably going to have some sideways action for a while. We'll have either a jolt up towards the morning pivot at the last 5 minutes of the day, or a jolt down to test this number, the 66850, once more. You can pause the video, read the notes, and go back to the chart to double check the work. Everything's all in here for you. The morning game plan, the morning numbers, the intraday updates. Not to mention we have stocks on the move for inside the numbers. Today we had 4. Only 2 of them hit their entry targets. So let's go take a look, starting with DHI. Entry number 1, 165.29. Entry number 2, 164.18. Alright, we got entry number 1 on the board. As you can see, we spiked it by a little bit, but then ripped it right back in the other direction. Gave you almost $2 on the trade. And that's all we're looking for. We're looking for at least a base hit. If it comes back down, which it eventually did, we don't let the trade go bad on us. Look at what would happen if you let the trade go bad. Pretty much just sideways down action for the entire day. So the rule is, we always book the base hit, we never let the trade go bad on us, and that's exactly what traders did in Inside the Numbers / the live room. We had some traders trading DR Horton. The next trade on the board was AEHR, and I'm always going to be transparent with you guys. This one didn't work out in our favor. Can't win them all. We did have a pretty awesome streak for stocks on the move. This was the first loss in a while that we had. Let's go take a look at what happened. So we blew past entry number 1, blew past entry number 2. As you can see right here, we were fighting the stop loss for some time, and our rule for stocks on the move is hourly close below the stop. As you can see right here was the hourly close. At 10:30, we closed below the stop, so technically that trade is off the board. And then the next 5-minute candle, we closed above it and pretty much never looked back. So again, this trade didn't really work out in our favor. We were 1 for 2 on stocks on the move, but that's okay. It's a trader's life. Always going to be transparent with you guys, whether wins or losses. Pretty funny how the next 5-minute candle after the hourly close, we finally closed back above it and then shot them right back up. Funny how that works. Trader's life. So if you're tired of guessing, you're tired of taking trades at numbers that just don't work, you need to come and check out Inside the Numbers. We got the game plan for you, we got the numbers for you, we got stocks for you, we got support and resistance numbers for you. For 13 different markets, we got everything for you, basically handed to you on a silver platter. Check out Inside the Numbers / live room. If you purchase the live room, you get Inside the Numbers for free. Alrighty, let's take a look at the Q people. She's down 0.53%, and take a look at what's happening. Right here, I'm going to draw a line of the most recent breakout area, and as you can see, the market is still respecting that area. We came up a few pennies short. The exact low today was 603.03. We'll give that a funny how that works. But the market still isn't able to get past that most recent breakout area. If we do start to close candles below that number, then she's going to want to make a test or attempt of this big time breakup candle low that coincides right with the 20 period moving average. Just taking a look at a weekly chart perspective, look how extended we are from home base. We are extremely extended across all markets. It's not just the Qs, it's the spiders, it's IWM, it's the Mag 7. We're extended all across the board. By the way, take a look at some of our support and resistance numbers for the Q people. Resistance number 2 was at 609.55. As you can see, pretty much right on the frickin' dot. And then we had a support number at 603.85. That was support number 3. Spiked it by a tad, but this was indeed support. Let's go ahead and take a quick look at XLF, the financials. Just taking it at face value, we've closed 1, 2, 3 days right on the 20-period moving average. She's not willing to give it up just yet. Yesterday, on Monday, we made a low of about 53.30, trying to make a run towards the 50-period moving average. Couldn't quite get there, and fought right back to the 20-period moving average. If you guys remember from the other day, and I mentioned this a bunch of times, is that this breakup candle low was going to be important. It falls right in line with the 50-period moving average. On Thursday, we managed to spike it by just a touch, and then rip it right back in the other direction to the 20-period moving average. If we take a look at the weekly chart, it pretty much just looks like we're eating time off the clock waiting for the 20-period moving average to creep on back up. And if you take note, we could get rid of this line and attach a new one right at this breakdown candle high. We're still using that as support on the way back down. Although these breakdown candle highs can be utilized as resistance on the way back up, they could also be utilized as support on the way back down, which we've been seeing for the last few days or so. Last but not least, we got SMH shaking my head to semiconductors. Smash mouth. She's down $6.33. Funny how that works. We're in the vicinity of testing the entrance to no man's land, which happens to be right around 335.18. It's not a huge entrance to no man's land. You have this gap right underneath that we talked about yesterday. That's at 333.69. So generally speaking, this entrance to no man's land is going to be a bull-bear battle. Just by the looks of it, that is a support zone forming. You got the entrance to no man's land, and then you got this gap down below, some unfinished business. If we start to close candles below, the next destination is going to be this big time breakup candle low that happens to coincide with this breakout area, and then you also got the 20-period moving average creeping right upon it. But keep in mind that there is some other unfinished business down below. You got this unfilled gap right here at 321.82, so that is unfinished business. If we do stay above the entrance to no man's land, maybe a possibility is we fill the gap and then come right back up, start closing candles above this area right here. She's going to want to work on the breakdown candle that was formed today. And that's what we got for SMH. Now with that said, thank you all so much for tuning in for another episode of Common Sense Market Analysis. I'm 𝐿𝐼𝐼𝐿. Just want to let you guys know I appreciate each and every single one of you. You can put that on a sticky note, and we'll be back ready to go in uniform for Hump Day tomorrow. With that said, I hope each and every one of you has a great rest of your day. Stay safe and take care now, folks.